Well, David, you and I were just talking about this earlier this week. So as you well know, private valuations, they lag public ones. So there's a lot of discretion that venture and hedge funds can use when marking the valuations of their public and private portfolios, but we are getting some numbers from some of the largest, most active investors of the last few years, Tiger Global being one of them, of course. The journal reports that the fund marked down the value of its investments in startups by about 33% across its VC funds in 2022. SoftBank marked down its Vision Fund 2 by a similar amount last year. Now, those were the two most prolific startup investors in 2021. That was the peak of unicorn valuations, companies valued at $1 billion or more. The next three, take a look. Coatue, Tencent, and Sequoia China. Tencent is an interesting one here because it has quietly become this investment powerhouse in Chinese and overseas startups, including American ones like Epic Games and Discord. All five of these names, by the way, they're investors in TikTok, ByteDance. So a lot of money at stake there as the government decides or tries to figure out what to do. David, as you well know, Tiger Global was the poster child of the tech boom, a crossover fund that did both public and private investing. It was hit, of course, extremely hard during the tech rout last year. But as you have been talking about all morning, it may be enjoying a little bit of a renaissance this year, especially over the last week or so. The NASDAQ and tech have been outperformers. We talked about it earlier this week. This kind of bizarro tech trade that's being boosted by lower bond yields and the prospect of a more dovish Fed. Been fascinated listening to your debate, Sarah, with Santoli this morning, too.
You know, Dee, I do wonder on these markdowns, of course, of private investments. It's been a question for a long time. If we start seeing down rounds of fundraising, will that bring yet another lower valuation, do you think? Or is this already accounting for that possibility?
That is key. If we start to see more down rounds, but I want to point to this chart where we looked at sort of funding rounds versus what's happened in SPACs as well as VC-backed IPOs. And the blue line at the top, look at that. We called it La La Land because, in a way, the startup world is living in La La Land. No one wants to raise a down round, so they're just not raising money. And there was so much capital available during that peak 2021 that so many startups raised money then, so they don't have to do a round. And that, begs this whole question of how these funds are marking them. They don't have to mark them down, so they're not. But how does that end? Probably not super well if we continue to see valuations come down or stay down.
Deirdre, thank you. Good chart. Deirdre Bosa.